What if everything you think you know about the crypto market is about to be upended? While mainstream headlines scream doom, a monumental shift is unfolding beneath Bitcoin's surface. A shift that could redefine the next cycle. For months, Bitcoin has hovered in a narrow band, seemingly stuck while stock markets melt up and gold explodes. The Federal Reserve just delivered another rate cut and, more importantly, announced that it will end quantitative tightening on December 1st, 2025, a pivotal policy turn that historically unleashes liquidity into risk assets. Yet Bitcoin, it just sits there, occasionally dumping and bouncing and dumping again. And altcoins, guys, don't even get me started. They just feel absolutely dead. To the casual observer, it's boring. It's even depressing. To those watching on-chain flows, it looks coordinated. Because beneath the silence, something is moving. More than 250,000 Bitcoin that had been dormant for 7 years or more have moved on-chain in 2024 and 2025. Some transfers trace back to the Satoshi era wallets. Hundreds of thousands of coins are changing hands quietly. No headlines, no panic, no hype, yet the price holds near 6 figures. There's a silent rotation underway. Whoever tips the scales next will set the direction of the entire market. Stick with me because I'm going to unpack what this hidden movement means for crypto and why this quiet moment might define the rest of the cycle. Now guys, I must say this video is for educational and informational purposes only and does not constitute financial advice. I'm back, guys. It's good to be back, and I'm adding some extra caution here to make sure I'm aligned with the YouTube algo. Now you can get a sense of why I haven't posted in over a week. If you guys are happy to see me back, I know I feel great to be back, or you just want to help the channel, you guys know how to do that. Hit that like button, and if you're new here and you get value from this video, hit that subscribe button. All right, guys, without further ado, let's get into the meat and potatoes of the story. We're talking about a macro turn here, guys. Before we zoom in on Bitcoin, we have to look at the world around it. The global system just hit a turning point. The Fed's latest cut and its plan to end QT mean the 2-year liquidity drain squeezing risk assets is about to flip. We're moving from tightening to easing. Normally that would spark a rally, but the markets keep shrugging. Why? Because Jerome Powell is talking tough, hinting that more cuts aren't guaranteed while quietly easing monetary conditions. Markets hate mixed signals, and a US government shutdown that froze cash flows and left nearly $1 trillion idle at the Treasury, plus the uncertainty of a Supreme Court ruling on Trump and China tariffs, and you get a global environment full of contradictions. And we know the markets hate uncertainty. Headlines sound hawkish. The plumbing is turning dovish. When that paused government money starts moving again, when QT ends and central banks ease together, liquidity will surge back. And Bitcoin, the most liquidity sensitive asset in the world, is likely to feel it first. So where are we right now? At the tail end of liquidity drought. Volatility is pretty dead. Traders feel like the market's asleep, and open interest is very light. Where are we headed? Toward the flood. When liquidity returns, it's likely to come all at once. Crypto tends to respond to liquidity before stocks, real estate, or any other asset class. Hearing QT ends is your clue that the next expansion wave is forming right under us. This macro turn sets the stage for everything that comes next. So I want to just kind of talk about a few things. One is the idea that quantitative easing being kind of just undermined right now? And that's kind of the thing that I'm wondering too, is we've made quite a few videos over the last several weeks talking about our thoughts on how this market cycle is different. We had that really, really great video with Arthur Hayes and Raoul Powell on the thumbnail and their logic behind it. And it makes a lot of sense. And so, I mean, guys, even this is the first time ever in the year after the halving that we didn't have a very bullish October. To me, this feels like everything is different about this cycle. And so we don't exactly know how it's going to play out. Another thing too is that people might be worried about all these whales that haven't moved their Bitcoin in 7 to 10 years. Do they know something that we don't? Are they selling because the market's over? Well, think about it. They haven't been selling their coins since 10 years plus. If they knew how to read markets and they were worried about it, they probably would have been playing every other cycle before that and trying to time the top and buy back in the bottom, but they didn't. They just held. So likely what's happening, and we're going to get into this more in just a second, is they just have had good trades, right? And there's a lot of uncertainty in the world. They've gotten Bitcoin at $1 and now it's $100,000. And, they want to go, just come to safety just in case, because we are in a very weird place in the world right now. So I'm not worried at all about these ancient Bitcoin holders taking some profits right now. And we'll get into a bit more of that in just a minute. Right now, we're witnessing something that Jordi Visser called Bitcoin's silent IPO. Now let's zoom in. Bitcoin is doing something it's never done before, holding above $100,000 while absorbing historic selling pressure from original whales. Early miners, OG holders, and some early institutions are cashing out. And the next wave of institutions is quietly taking their place. And like I said before, this is Jordi Visser. We've had him on the show. Awesome guy. He's calling this the silent Bitcoin IPO. It's like a company that already succeeded finally listing publicly. The earliest believers are realizing profits, not because they've lost conviction, but because they finally can. Consider the scale. Galaxy Digital reportedly sold $9 billion worth of Bitcoin for one of its clients this year, and the market barely flinched. QCP Group tracked around 405,000 Bitcoin moving from legacy wallets to exchanges in October alone. Yet Bitcoin didn't break below $100,000. 10x Research argues the story now isn't about retail hype. It's about whether institutional inflows can outpace OG distribution. As ETF flows cool and volatility compresses, Bitcoin is starting to behave like an established asset. When people say it feels boring, that's actually the sound of maturity. The early speculative volatility is coming to an end. The adoption and stability is starting to begin. Guys, in past cycles, we've had extreme volatility. One, because it took less money to move the markets, because the market cap was of all coins, including Bitcoin, was much lower. The real crazy price gains in past markets have been because of retail. They're not really here yet still, and maybe they don't really show up. Maybe they do after Bitcoin takes time and starts climbing a bit. This is different. I don't have the chart pulled up right now, but if you just go to TradingView, look at Bitcoin USDT for the entire time, like from 2013 to now, and you look at the different bull markets. So 2017 and 2016 starts to go up, and then 2017 parabolic, blow off top, comes down. 2020 starts to go up. 2021 explosive, blow off top, comes down. This bull market would have started in 2023 and go till today, and look at how it's a linear, progressive move up and to the right. No retail blow off, no retail even being here. This is what we just talked about. This is a trading in hands from early adopters to institutions, governments, ETFs that we're seeing right now. Still no retail mania. And this is, again, a likely why I think that this market is much different. And because of all the things that we've talked about in past videos, the liquidity, the shift in ease from tightening to easing, these kind of things, I believe that we're going to extend out to next cycle, or next year, I mean. And I think that at some point next year, we probably will have a parabolic part of the year. And I've described this in past videos, right? My thoughts on, markets and midterm elections and 2020 elections and kind of the plan behind that. But anyway, let's get back to it. So guys, while whales rotate supply on chain, something just as important is happening off chain. During the US government shutdown, Bitwise, Grayscale, and Canary quietly launched a new crypto ETF using an automatic effect rule. If the SEC doesn't act in 20 days, the filing goes effective. No approval, no delay. That move proved crypto products can reach Wall Street without permission. And investors showed up. The Bitwise Solana ETF, ticker BSOL, took in nearly $200 million in the first few days, even outperforming several smaller Bitcoin and Ethereum funds. Why? Because it offers staking yield of around 7% inside a regulated wrapper. Traditional investors can now earn blockchain yield through a brokerage account, no wallets, no keys, just yield and compliance. Solana's smaller market cap makes those inflows hit harder. $1 billion into SOL moves the needle roughly 5 times more than it would in ETH. And institutions notice Solana's ETF launch proved crypto assets can deliver real yield, real liquidity, and real demand from outside the crypto bubble. It's not just an altcoin now. It's a bridge between blockchain and traditional finance. So has Solana officially graduated from an altcoin to a blue chip territory? I would say that it depends who you ask, right? Because in our world, our crypto bubble, I think for a long time now, Solana has been a blue chip. But I think if you ask the average person on Wall Street, they may likely never have even heard of Solana, or they're still looking at this as a very speculative, low cap altcoin. Because when everyone I speak to on Wall Street says that people are now pretty aware of what's happening with Bitcoin, a lot less people are aware of what Ethereum is, and almost nobody knows what Solana is and below, right? So is it a blue chip? It has been to us for a long time. To Wall Street? Not yet. I don't even think people understand really what smart contracts are. So still trying to wrap their head around Ethereum and what you can do with smart contracts. And they just know about that because it's been around for so long. And a lot of institutions are building there. So it has more trust. All right, guys, next up, we've got Canary's XRP ETF, likely launching in mid-November. Fidelity and VanEck are updating their filings. A domino effect is underway. Every issuer wants in before the next liquidity surge. This is what institutional phase looks like. Infrastructure being built to welcome massive capital. The gatekeepers that once kept crypto separate from Wall Street are now the bridges. So guys, what's actually happening in the digital asset treasury department, the DATs? Well, ETFs are pulling new money in. Another corner is showing cracks. The digital asset treasury boom companies backing their stocks with crypto reserves. They've started to wobble. 2 DATs just sold portions of the reserves to buy back their own stock. ETHZ sold about $40 million of ETH, and SQNS moved roughly $112 million in Bitcoin to Coinbase. These sales are small, but the psychology matters. If more DATs trading below net asset value, it could spark short-term price pressure. Still, they are minor ripples in a multi-trillion-dollar industry and on-chain economy. And guys, we've talked about this on the channel a lot. You know, I don't think that there's going to be room for many digital asset treasury companies that simply have no revenue model and just buy and hold a crypto asset and wait for it to go up. I think that they need to find a lot of other ways to generate revenue, make a real business, and hold the digital assets on the treasury. And so the guys that end up being creative, clever, and know how to run a business are going to be the kind of DATs and publicly traded companies that actually have interest from the market, right? The big kind of incumbents are going to be the ones like Strategy, for example, that really, and even Strategy has been forced to kind of look at new products that offer yield and generate revenue to remain interesting and keep things going. You got to innovate and you got to continue to impress the market. So guys, right now the markets feel exhausted. I know that you feel it. I definitely feel it. After months of chop, most traders, they've turned out. ETF inflows have slowed to a crawl. Volatility is at a year-to-date low. Leverage has been wiped out. BlackRock's Bitcoin ETF pulled in less than 600 Bitcoin last week, just a fraction of the tens of thousands it absorbed weekly months ago. That slowdown is typical before new capital steps in. The market breathes in, holds still, and waits. Nye Crypto noted that even after all the selling from older whales, Bitcoin still holds its long-term structure near the 200-day moving average. That $100,000 level has become the gravity point for this cycle and the place where conviction gets tested. Everyone wants exposure at breakouts. Few want to sit through the boring middle. This is the middle. As Miles Deutscher put it, 90% of my gains over the past 24 months happened in 4 of them. The other 20 were sideways or down. Markets test your patience before they reward it. The smart money is accumulating quietly, waiting for liquidity to flip and sentiment to turn. Guys, I'm in a lot of different private groups, and I realized that the way I think about markets and the way a lot of them think about markets is very different, right? They're thinking about kind of short-term trading. They have a daily or a weekly, kind of maybe even a monthly time horizon. For me, and I think a lot of you guys watching this, we're thinking about not getting into too much risk, aka leverage trading, keeping the predominant amount of our crypto portfolio in the real blue chips like Bitcoin, Ethereum, maybe some Solana, some Sui, if we're feeling a bit more open to volatility and price movement, but we're speculating the long-term growth is going to be more meaningful or than the like Bitcoin and Ethereum, for example. And so, yeah, I have a long-term perspective. And if you're watching this, you have to understand that I'm very bullish on Bitcoin and Ethereum and the crypto market and blue chips. But my outlook, is a 5 to 10 year vision. So mostly, I'm just holding spot and trying to find something else to do when the markets are very boring. I mean, really, if we don't have an altcoin season where we can place small bets on things that look like they're going to pop off, that's fun. That's gambling, and I'm all down for that. Small percentage of the portfolio. Let's go see if we can do some 100x's. And if that happens, we'll talk about it on the channel. But it should be a very small amount of the portfolio. And again, none of this is financial advice, just what I'll be doing to have some fun. And also, I know that a lot of you guys are confused. A lot of people in the groups are confused. Should they be buying this dip? Should they do a leverage because it's going to bounce? Should they buy? Should they sell and cash out of the market and all these kind of things? I definitely don't want to be the one to tell you what to do or give advice on that. And again, I think if you're really, really worried about your crypto portfolio, then you probably have too much exposure to the market, and you're probably dependent on this portfolio to perform for things that you need to pay for in your life. And so, make sure that this is not creating massive anxiety for you on a daily basis. And if you just zoom out on the Bitcoin chart, it's always up and to the right. The macro signals have never been clear. The tailwinds have never been more clear to me. I do believe that we're going to go well into 2026 and the price will continue to go up. If anyone goes out there and buys a dip right now and then says, Kyle, you said it was going to go up, and then over the next few months, it goes down because there's a correction or things that we talked about in this video, waiting for liquidity to come back, then people are going to blame me and people are going to blame themselves for doing this. And so, again, I can't give financial advice, but for me, since 2012 and 13, I've just been holding Bitcoin, spending what I need to survive, and it's worked out very well for me. And I still think, personally, there's a lot of upside in Bitcoin left. All right, guys, so now let's talk about some of this kind of sovereign and institutional adoption. While traders obsess over short-term levels, something more important is happening. Bitcoin is crossing into a national strategy. France recently introduced a proposal to build a national Bitcoin reserve of roughly 2% of the total supply, around 420,000 Bitcoin, over the next 7 to 8 years. It's the first plan of its kind in Europe and signals a shift from should we allow it to how do we integrate it responsibly. The bill even encourages renewable powered mining. Meanwhile, major institutions are embedding Bitcoin deeper into finance. JP Morgan is testing Bitcoin and Ethereum as collateral for institutional loans. This is going to happen. Coinbase and Citi are building stablecoin payment rails for large clients. Even Jamie Dimon conceded that crypto is real and predicted all major banks will eventually use stablecoins to move money efficiently. Bitcoin is being woven into the architecture of the financial system, one test, one balance sheet, one partnership at a time. This is the institutional and sovereign phase. Guys, what do you think that means when America has already established a Bitcoin strategic reserve? They haven't started buying it yet, but I have no doubt, or have little doubt, that the United States will start buying. France knows this is going to happen. Now they're going to do it too. And this is going to start going just like this, just like the Bitcoin treasury strategies, the DATs. You know, no one really wants to be the first person to do it. People are less hesitant to be the second person to do it. But once they see a couple others doing it, they're going to jump on the train. And if you guys watch the channel a lot, you know that I believe it's inevitable that Bitcoin will end up as a global strategic reserve, probably just alongside gold. And who knows, maybe it will even one day be used as a peer-to-peer currency the way Satoshi intended it. Maybe it does, maybe it doesn't. But now with France coming on board, I guarantee you within the next 6 months, we'll probably get a few more different sovereigns that start buying Bitcoin publicly for their reserve as well. We also have the tokenization and stablecoin wave as well. As Bitcoin matures, the rest of crypto is evolving. In a few months, several major financial and fintech players quietly moved on chain. Western Union, a USD payment token, USDPT on Solana with Anchorage Digital, designed to settle remittances instantly. Then you got Revolut with 65 million users. They rolled out a 1-to-1 USD to stablecoin swaps with no fees, effectively turning every Revolut account into a fiat crypto gateway. For small businesses and freelancers, that's a lifeline. Cheaper, faster, and always on. The tokenization wave is also accelerating. Securitize, and full disclosure, I am an investor, is going public via a $1.2 billion SPAC. Consensus is working with JP Morgan and Goldman Sachs on its IPO. And Animoca Brands is filing to list on NASDAQ via a reverse merger. This is how the bridge between the old financial world and the new is being built. Not through one announcement, but through hundreds of integrations that turn stablecoins into the settlement layer and tokenized assets into the investment layer. Everything we've discussed points to one thing. The system is changing hands. Bitcoin's base is shifting. Old money is almost done distributing. New money, institutions, sovereigns, and long-term holders is setting up. Global liquidity is about to turn back on. That combination doesn't happen often, but when it does, it often redefines the cycle. Right now, we're in the quiet middle. The part nobody respects until it's over. When everyone looks back and says, man, I wish I would have bought then. Whales rotate in silence. Institutions accumulate quietly. Governments test policy. Then suddenly it happens. And in hindsight, it would have looked so obvious. And the next phase is likely about absorption. When liquidity floods back, Bitcoin is likely to be the first asset ready to catch it. The rails are built, the ETFs are live, and sovereigns are watching. Everything that needed to happen has already happened. It just hasn't fully shown up in price yet. Markets will begin repricing everything they ignored while the world was frozen. That's how rotation always begins. Slow, silent, and then all at once. If you've been patient through the noise, this is where that patience pays off. The setup is complete. All that's missing is a spark. And when it hits, it won't feel like a breakout. It'll feel like recognition. So guys, as always, stay sharp, stack your Satoshis, and I'll catch you guys in the next one. See ya.